Over $1.4 trillion vanished from the stock market in a matter of hours, not because of a financial crisis or war, but because of one statement from Donald Trump. Trump stunned the world with a shocking announcement about Greenland, leading to panic on Wall Street. In a surprise press conference, he revealed that the US already had military presence in Greenland and might send even more troops, sparking fears of a new conflict in the Arctic, a region already under intense geopolitical competition. The stock market reacted immediately, with the Dow Jones plummeting by 540 points and the S&P 500 nearing correction territory. Investors feared that the US might be dragged into unnecessary military buildup at a time when the economy was already struggling. Trump also revived his 2019 idea of purchasing Greenland, despite Denmark's previous rejection, and even suggested Canada would function best as an American state, causing diplomatic tensions. NATO leaders and Greenlanders voiced strong opposition to these ideas. Following these statements, the US financial markets went into free fall, with major corporations taking massive hits and the Dow Jones collapsing by over 1,400 points, officially turning negative for the year. Apple, Nvidia, and JP Morgan all saw significant drops. Many financial experts warned that if Trump's unpredictable policies continued, the US could enter a mild recession by late 2025. Meanwhile, the Biden administration and Democratic leaders may need to step in to counteract the economic and diplomatic chaos triggered by Trump's actions. Investors are advised to hold cash reserves, avoid major investments in tech and finance for now, and focus on energy and defense stocks, which may benefit from the geopolitical turmoil. It was Tesla, whose stock plummeted 99.2%, slashing $125 billion from its valuation in just one day. The sell-off didn't stop there. Microsoft, Meta, and Google also saw losses between 5 to 7%, wiping out another $350 billion in market value. Combined, analysts warned that if the situation worsened, this could lead to a tech bear market where values keep declining for months. The collapse of the tech sector rippled across the market, triggering a chain reaction of investor panic beyond tech. The airline industry and hedge funds were also caught in the storm. Delta Airlines, one of America's largest carriers, announced a 50% cut in profit forecasts due to rising fuel costs from Canadian tariffs. Instantly, Delta's stock plummeted 14%, marking its worst drop in 5 years. American Airlines and United Airlines also took heavy hits, with stock prices tumbling 11.2% and 9.8%, respectively. The prolonged uncertainty led to a mass exodus from hedge funds, with major investment firms like BlackRock, Vanguard, and Citadel engaging in a massive sell-off, liquidating stocks at the fastest pace in 2 years. A staggering $240 billion was pulled out of the market in a single day, amplifying the Wall Street sell-off. This triggered a domino effect across the financial system, as investors rapidly lost confidence in the administration's economic policies. The collapse extended beyond tech and airlines, shaking the entire US financial system. Major banks like JP Morgan Chase, Goldman Sachs, and Bank of America each saw declines exceeding 5%, driven by fears of an impending recession. The S&P 500 dropped 5.7%, marking its largest single-day loss since the 2020 pandemic. The retail sector, already under pressure from rising costs, was hit hard by tariff-induced inflation. Walmart lost 12% in value, wiping out $56 billion in market capitalization. Amazon fell 9% as consumers tightened spending amid growing recession fears. Even cryptocurrency markets often considered a safe haven, weren't spared. Bitcoin dropped 5%, sinking to $42,000 as investors pulled out of risky assets. The entire crypto market saw over $200 billion erased in just 24 hours. The bond market also sent alarming signals. The 10-year US Treasury yield fell to 4.22%, signaling that investors were fleeing stocks for safer assets, a classic sign of an approaching recession. This wasn't just a short-term market shock. It was a full-scale confidence crisis, threatening the stability of the US economy. A single flawed trade policy and $4 trillion vanished from the US stock market overnight. America's economy is now fighting itself rather than its global competitors. The question remains, if $4 trillion evaporated in just one day, what happens next? As the US economy falters, Canada not only remains resilient, but also strikes back with force. From boycotting American goods and cancelling travel to launching strategic countermeasures, Canada has proven that it won't be easily subdued. This is an uneven confrontation, and this time, Trump is the one losing control. But will he retreat or push the US further into an inescapable economic crisis? Trump once claimed that tariffs would strengthen the US economy, but in reality, his erratic policies have only plunged the country deeper into crisis. US GDP is plummeting. The Federal Reserve Bank of Atlanta projects a 2.8% decline in US GDP, marking one of the steepest drops since the 2008 financial crisis. Meanwhile, Canada's economy remains stable, growing at 3.2% thanks to its flexible trade policies. Consumer confidence in the US has hit a decade low, while Canada's has risen by 4.7%, reflecting a stark contrast in market sentiment between the two countries. Inflation continues to rise, with food prices in the US increasing by 5.3% compared to just 2.1% in Canada, illustrating how Trump's tariff policies are making life increasingly difficult for Americans. The US stock market is in turmoil, with the Dow Jones dropping 7% in just 2 weeks, while Canada's Toronto Stock Exchange, TSX, rose 2.5%, demonstrating investor confidence in a more stable economy. Canada wasted no time in striking back, delivering a powerful blow to the US economy. Boycotts of American goods spread, with provinces such as Ontario and Quebec removing American liquor from store shelves, causing sales of brands like Jack Daniel's and Kentucky Bourbon to plummet by over 30%. Within a month, the US tourism industry has taken a major hit, with 65% of Canadians cancelling their trips to the US, resulting in over $5 billion in losses for American tourism and hospitality. Hotels, restaurants, and attractions in border states like New York, Michigan, and Washington are facing severe revenue declines. Exports from the US to Canada dropped by 15%, while Canada is diversifying its trade with alternative partners. The US auto industry is also struggling as Canada raised import tariffs on American cars by 15%, increasing prices and reducing sales, especially in Michigan and Ohio, where thousands of jobs depend on the auto industry. Canadian leaders are openly criticizing Trump's policies, with Chrystia Freeland calling them the dumbest tariffs in history, and Prime Minister Justin Trudeau vowing not to back down until these unjustified tariffs are removed. Mark Carney, a leading Liberal Party candidate, stated that Canada's economy would outpace the US if Trump's policies continued. Canadian media and business leaders are calling this a crisis of Trump's making, with even some US allies questioning Washington's stability. With every tariff imposed by Trump, Canada retaliates, ensuring that the US economy suffers greater losses. The US is losing its trade advantage, while Canada is expanding its economic partnerships, reducing reliance on the American market. Chaos within the Trump administration continues as businesses and officials criticize his inconsistent trade policies. US states, particularly industrial hubs like Michigan, Ohio, and Texas, which depend heavily on exports to Canada, are feeling the impact. Trump's approval rating has dropped to 39%, the lowest since his re-election campaign began, and the US-Canada trade war is escalating. Japan and China, the two largest creditors of the US, are dumping US treasuries, raising concerns about the future of the US economy. Japan sold over $20 billion in US treasuries in October 2024, primarily due to the sharp depreciation of the Japanese yen. Japan is also focusing on domestic investments in infrastructure, technology, and key industries, and is prioritizing economic independence. China is similarly diversifying its foreign reserves, moving away from US treasuries amid ongoing trade tensions, which could trigger major transformations in the global financial landscape. The sell-off of US treasuries by Japan and China could lead to higher US interest rates and increased borrowing costs for the government, businesses, and everyday Americans, further complicating the US economy.